Okay, I guess it's time for us to move on to our lively panel discussion. Alex and Adam will stay with us, and we also have a couple more honorable guests joining us today for the panel discussion. The first guest is Saeed Hareb Darmaki. He's a co-founder of Alphabet Digital Currency Fund. He's also an accomplished blockchain consultant with excellent command of crypto and blockchain asset portfolio management. And we also have here today our last minute guest, Stefan Deiss. He's an experienced blockchain entrepreneur, and he's also a CEO of Blockchain Propulsion. The company is pioneering financial technology company from Switzerland.
Thank you for having me.
And our host today is Yulia Gushchina, the head of business development department at PixelFi.
Well, first of all, thank you so much for the warm introduction. And it's been so interesting to listen to these two presentations. A lot of insights, even for us who have been working in this sphere. So truly a pleasure being here. And yeah, I'm excited to start our discussion. And I would like to encourage everyone to feel more comfortable, less formal, and be more active in discussions down here in our chat. And we can also let more people to participate in the panel discussion so that it's more, it brings more value to everyone who is on this webinar. And since we already know each other, and Anastasia gave good introduction, so I will skip this from the list of my actions. And I believe that we will discuss today this topic of challenges. Yeah, it could be something that is a little bit painful because all of us, we work in the sphere of blockchain. Some of us are on the finance side, some of us are on the technology side, advisory, and so on. And definitely there are some constraints that hold us from being more productive in this sphere. And we can name different things that are very challenging, like regulation. Alex just gave us a very good overview. Problem of security on the technology side. Problem of the different new blockchains coming up. So we always struggle to see which one is good, whether there will be another one in 1 year. So how are we going to migrate the data? Now everyone is talking about NFTs. So probably very briefly, everyone could express their feelings. What are the biggest challenging on the market right now that hold everyone from being more productive, bring more values to the product and to the market?
Yeah, sure to answer the question. I mean, I think one of the key things is really the regulatory environment. There's very few jurisdictions today where you have that legal certainty. I think another aspect is also the whole area around the secondary markets. You know, where do we get the liquidity? So it's one thing to tokenize assets, but you need to also have the secondary markets in place. And so I think those are some of the challenges that we see, but we are seeing a lot of different organizations around the world really lining up to be able to facilitate that liquidity by you know, getting involved with digital security exchanges that are really focused on security tokens. And at the same time, we're seeing different jurisdictions really trying to get their digital assets regulatory framework in place. So I think we're seeing the right traction in the right direction. And of course, there's certain countries that are more pioneering in the space and some that are a bit lagging. But I think it's really about selecting the right jurisdiction and trying to find out where can those types of projects be able to thrive in that mixed environment.
Right, just to find the right place to start business. Adam.
Maybe I'll add to what Stefan mentioned. I agree with the points he raised, but I think another key element which has prevented the tokenization of assets or security tokens from really taking off, I believe, is you're not seeing the the issuers of security tokens, or the owners of assets, you need to have really quality assets, or really high value assets that are going to be tokenized in order for this to really take off. So I think there was a lot of hype a couple of years ago, and when that was happening, I was one of the, I don't know if I was one of the few or one of the only people was saying, look, we're still 3 years out from security tokens or asset tokenization really getting to those levels that you're shouting about and hyping about. And until today, I think that's still the case. I think there's still a lot of question marks around, has this really taken off? And in my opinion, it still hasn't. And I think probably like another year or two before we see some real quality assets being tokenized, and before we see like really, really big asset owners, be comfortable with tokenizing their assets. I think the big owners of assets are waiting for the smaller guys, or the startups or what have you, to tokenize their assets, and then see and find out what issues they are having, and let them make the mistakes first, and then they'll start coming into the market. So it's kind of like everybody's playing a wait and see game when it comes to the issuers of these assets.
Yeah, I completely agree with Saeed. What we've seen is that the small companies were early movers to try to be innovative in 2018, 19, 20. I think that this year, now that there's more regulatory clarity, we are seeing issuers with larger assets wanting to tokenize. And I think the main impediment has been that they're assessing cost of capital. And when they can see that tokenizing can decrease ultimate cost of capital, then it makes sense. Unfortunately, today, the only way to do that is to highly incentivize the investors. And so where big projects can tokenize the assets today, they're really taking a bit of a haircut and not doing as great as they could, but they're doing it to be an early mover, to make a name for themselves, for the PR value, the brand value. Which is good, and it's slow progress. Like Saeed said, about 3 years ago, I was saying we're probably 6 or 7 years out from seeing the type of adoption we'd all like to see, and I think we're on that trajectory. But it's just a matter of educating those that are open to the idea of tokenizing their assets, and then showing them the right path.
Adam, just a quick follow-up question. You mentioned that smaller companies are quicker. Does it mean that they are more flexible to take the risk, and they don't have all this, big, many years reputation like big companies have been building their careers, their markets, and they were fighting to get customers' respect and so on. So
yeah.
Like, okay, let me wait and see what's going on. So probably smaller companies are more flexible, or why do you think that they are more?
Absolutely. 2018, 2019, I spoke to dozens of issuers about tokenizing a Series A round. But the reality is that no investor very few investors at that time were open to, it's essentially doubling up on the risk. From an investor's perspective, I'm already making a risky investment, and now you're asking me to do that in a way that very few have done before. And investors kind of steered clear. They were shy about it. But yeah, the issuers themselves are going, yeah, why not? Let's be different. Let's do something innovative. Let's be creative. And I respect that. And so, some were successful, but I think in terms of how many really attempted it and how many succeeded, it was, it needed to happen. And today, those that are choosing to tokenize securities in the 100, 200, $300 million range, they don't need to tokenize their assets. They can go to institutional capital like they've always done, but choosing to tokenize it means that they get to differentiate themselves and kind of go down in the history books as one of the first large successful companies to do so. And that's important to some people.
Right. Alex, would you like to add something or we can move on?
Yes, I'd like to add something. Well, I remember a couple of years ago when you know, for example, you go to a family office and you say, well, I'm tokenizing this company, you know, would you like to purchase this token? And they would say, well, it would be very difficult for us because we don't have in our sort of, when we set up our funds, we need to make provisions. How do we keep securities? Who is actually the transfer agent? How does fund operate? And, you know, and then they couldn't even understand how to custody these particular assets and how the cap tables would work. And, you know, in essence, there were no infrastructure. And now the infrastructure is being built. However, there is little benefit to them because they do not provide high yields. There aren't any high returns. And they're not at the point whereby they could fractionalize ownership or do anything like that. So people who could actually adopt it really quickly, who have a lot of liquidity and who could purchase these assets, they're just not interested. And the regulation prevents going to a retail at a larger scale at the moment, because you can't just go there and say, buy the security token without the appropriate regulation like the Reg A+ in the US, and without the appropriate broker-dealer structure, or just owning direct is still problematic. And then even if you can do this, the level of adoption within the general population, understanding of blockchain is very low. Sometimes people ask me, what do you do? I said, well, I'm working in blockchain consulting. And they're saying, consulting, we understand, but what's blockchain? So in essence, I have to agree with Adam that it would take another few years before people are educated enough. And once this whole fractional ownership sort of idea starts to sink in, then it would become more accepted and of a more accepted practice. And then people would start, the adoption would pick up, and then it would become a lot more popular than it is now.
Yeah, I totally agree. And yeah, Stefan, you mentioned that legislation is the biggest challenge or the most important thing that makes the direction in the blockchain and cryptocurrency sphere. There are certain jurisdictions like the UK, Alex mentioned today, that has no blockchain law. And we know that Switzerland, as you're representing this country, let's call it like this, pretty advanced in terms of blockchain pact, in terms of adoption and so on. And what type of advice can you give to the companies that think that playing in the gray area when the regulation is not defined yet, they just consider that no legislation, no regulation, no rules, so we can play whatever we want. What type of future can be foreseen for such companies? Any good advice for them?
Yeah, I mean, it's a very important question. I think it all depends on the underlying business model. So if it's a company that wants to operate maybe in the gaming industry, maybe then Switzerland is not the right jurisdiction. If it's a company that wants to operate in the financial industry, certain level of credibility, then you have to operate in a jurisdiction like Switzerland and perhaps others where you have that legal and regulatory framework. So it all depends on the business model. But what we do see is there are various types of projects that select Switzerland as a jurisdiction just because they have that legal certainty. They're not worried about, you know, some authority coming at some later point in time and then pulling the whole thing apart. So it's very much focused on the type of business model, and what we do see is that a lot of these different projects that are really worried about, or let's say operating, their value proposition is around credibility, then of course they select Switzerland. If it's maybe in the gaming industry, they may select Malta, for example, or another different jurisdiction. So it all depends on the underlying business model. But I think what's most important is that before they select the jurisdiction, they have to understand what are they trying to achieve, what are they trying to offer. Simply saying I'm going to set up a blockchain company is not enough. They have to understand what are they trying to offer to the market, and what are their target clients as well, who may, for example, not be the ones in the jurisdiction they want to set up their business.
Right, interesting point, because I'm as far as I can see, who is attending today at our webinar, there are some people who are representing blockchain startups at a very early stage, and since you're advising from the financial side as well, your clients, what is the minimum probably document back that a startup will have to have in order to go to the regulator and ask the permission to be registered as a business unit inside this country? Do you have in mind maybe a white paper, business plan, or tokenomics description? What, any idea what like must have documents back for the startups?
Yes, I think we need to go back to the basics of having a basic business case. Show us the 5-year revenue stream. What's the P&L looking like? The whole area, I think, around producing academic papers and white papers, those days are over. You have to really show some substance in your business model. So I would always advise them to look at the underlying value proposition, put a business case together, let's see the financial numbers, and then of course work on that basis. So there's a bit more to simply putting together a white paper that's 20 pages and a lot of academic material. It's got to have really something that's in there, a well-defined business plan, a strategy, the team, all of these different factors.
Right. Thank you. Saeed, I would like to ask about the new blockchain regulation in the United Arab Emirates that was introduced in November. Alex mentioned it just slightly during his presentation. So yeah, as we know, the UAE is boosting emerging technologies a lot, and we know that there are a lot of things happening in the country, and a lot of projects are getting adoption pretty fast, and so it gives a lot of energy to the whole world to see and follow. And with this tokenization regulation, which was introduced in November last year, have you seen any boost of activities on the market of tokenization of any assets, or it is still something that goes step by step, very, very slow?
Yeah, good question. I briefly saw that Alex was talking about the UAE as a jurisdiction. So in the UAE, you have the offshore kind of business zones or offshore free zone, and then you have the onshore kind of zone. And each jurisdiction has a different regulator. So in terms of the offshore regulator, they actually did come up with guidelines and regulation around digital assets and tokenization of assets. But actually, I don't think much has come out of that in terms of activity or companies, issuing security tokens or tokenizing their assets. With regards to the onshore regulator, they did come up with a kind of a framework, but it was pretty basic and not very in-depth enough to actually, support companies that want to tokenize assets, or not the right infrastructure is in place yet to support that. So I think towards the end of this year, the onshore regulator in ESCA will be able to go into more detail and actually, come up with a more robust regulation and guidelines for tokenizing of assets. So I think it's still a way yet. I think there is a blockchain company in Tezos, which has one of their folks based in Dubai, and I think they did make an announcement about working with a local company in tokenizing their assets, but I think that's still not happening yet. I think it's still in the process of happening. So I think closer towards the end of this year, you might see more activity come up related to tokenizing of assets. And I think the first use case would be more towards real estate, because that's one of the biggest kind of industries, especially in Dubai. So I think that's what the most of the activity will come from. that there's certainly talks and you know, plans around it, but I think the regulation isn't robust enough or kind of you know, laid out in a way that would enable a company to actually get out there and immediately, you know, do a security token or tokenize their assets. So yeah, I think there's still work to be done, and there's still more activity that needs to come up, but it should happen towards the end of this year, I believe.
Mm-hmm. And as for real estate tokenization, just following up with what you have said, is it more a door which is opening for small investors, like individuals who can invest 2K, 5K, or this is the field more for industrial investors, for accredited investors, for the companies who are bringing really a lot of capital? What is the main target around it? How do you think?
I think the main incentive for real estate tokenization, I mean, yes, it's all well and good for fractional ownership of real estate and so on, but that's more focused on the retail side. But I think I don't think the retail in the UAE or the retail people in the UAE are kind of educated enough to you know, to actually really look for this. So I think that's not the primary incentive. That's a kind of a bonus that's attached to it. But I think the main incentive is for the asset owners who are sitting on illiquid assets, because real estate is known to be an illiquid asset, and the main driver or incentive for these asset owners to tokenize their real estate is actually to you know, to bring more liquidity to their assets, and I think that's the main driver.
Yeah, I agree with that. You know, my experience with real estate tokenization in the U.S. is well, and in Europe as well. The modification to the Reg CF capital raise limit, I think, is creating a lot of attention. People are paying attention to where Reg CF is going with the increase in the cap raise size. So that, in combination with the blockchain tech that some of the leading Reg CF platforms are accommodating, I think is creating a lot of activity, which is exciting on the kind of smaller retail side. On the larger commercial real estate side, what we're seeing is that, you know, if you're looking to tokenize a cap raise for real estate development, good luck. If you're looking to use the technology for a refi, then you're heading in the right direction.
Yeah, thank you for the insights. Alex, you have been working in the sphere of real estate tokenization as well previously. Do you have any insights to share on this topic as well?
Well, yes, but initially there were very sort of unfounded expectations on behalf of companies that were tokenizing their assets, that they would manage somehow to raise more finance than they're worth, you know. So initially they tried, just because of the novelty factor and saying we run an STO, they tried in essence to skew the financial realities and try to do some things that quite unusual for normal real estate transactions. So they tried to, for example, to delay the valuation and just to offset the future gains against the current investment, and therefore reducing the actual equity value of what they were selling. Rather increase the equity value of what they were selling. And that posed a lot of problems. And in essence, it still comes down to the hard economical realities and things like discounted cash flow and capitalized earnings analysis. They will always remain as the main factor in business valuation. So in essence, tokenization is a very useful instrument, but it doesn't change facts on the ground. And that's something that initially was not clearly understood, especially on the back of the ICO boom. But now there are interesting projects in rentals going on when you could, in fact, tokenize rental incomes. in exchange for certain, investment propositions. So these kind of things are going on, and I think that is an interesting area to develop. So I think innovation would drive the race, because if you're trying to sell a traditional instrument on blockchain, it still is a traditional instrument. But if you're trying to sell something innovative like smart contract-based hot desking facility, then that could be a lot more interesting to the potential investors and to the potential users, and to raise more sort of revenues. But again, these are new economical models that facilitated by the new technology, distributed organizational models that allow you to do this. I think my example is not particularly apt, given that we're all on Zoom at the moment and not in a conference room. However, the case is still
technologies. It's connected to healthcare.
Yeah. So, well, in essence, that actually slowed down the markets a lot in terms of this type of innovation. But I think these kind of things are yet to come, and we will see tokenization of newer approaches to business models, and they would have more success than just tokenizing what's already out there and has existed for centuries, in essence.
This is very interesting thought, because this reminded me of very, very early days of the internet and digitalization, when first websites at .com era were dedicated to mobile phone books, when we had a paper, mobile phone and addresses book, and people wanted to get it more. So this was considered as advanced. However, no one is using it anymore, and there are quite a lot of other things that we're using in the internet. Yes, we definitely need to put a lot of hope to the innovation in order to boost it, right, Stefan?
Yes, I mean, we have had experience with tokenizing real estate assets. I mean, we've done this through two ways. One is tokenizing equity in Switzerland. So we did that back in April 2020, before we had now the regulators coming up with that legal certainty. And what we did there is basically transferred a smart chain city project, an infrastructure project, about $500 million, transferred that from Brazil, asset ownership, to a Swiss SPV, and tokenized the shares of that SPV. And of course, there's also been, the various challenges around the legal ownership of those assets. You have to go through really a very detailed process to be able to facilitate that type of transaction. And then, of course, what we also did in Liechtenstein is we opened up the first tokenized alternative investment fund, a regulated institutional grade fund. Interestingly, we had US assets out of New York in that tokenized fund. So those are the two, I would call it, financial instruments that we've thus far been able to tokenize, with real estate assets as the underlying asset that investors could invest in. And of course, it's in two different jurisdictions. One is in Liechtenstein, that introduced their blockchain act back in January 2020. And then of course in Switzerland, where we were able to do the tokenization of equity, but didn't yet have that legal certainty, which we now have since last month. So that's, I think there's some very interesting aspects, but I think one of the points that was mentioned early on by one of the speakers is that it's very important to have these high value assets that are being tokenized, because if it's a bad asset or it's in a bad location, it wouldn't sell today, then even tokenizing it and putting lipstick on it is not going to change. It's still not going to be tokenized, or at least it's not going to attract investments to be able to participate in that. So, it's important to also have the right asset that is tokenized.
Right. Yeah, since we are talking a lot about legislation and new blockchain laws, I was thinking that the current mechanism of governmental regulation is very solid. It has been built for many years, and we know that there are quite a lot of very powerful people, families, companies who are sitting very tight on their bank accounts, and they don't want to give any power away, because decentralization in certain way will bring their businesses and systems to a new era which will destroy what was built before in terms of power and regulation. But still, we see that more and more countries, Switzerland, Liechtenstein, Singapore, the UAE are introducing new legislation bases to boost and make the new technology adoption faster. I'm talking about decentralized systems, of course. And what is the reason for the governmental entities to do so? What's the value behind for them in this journey to make digitalization and tokenization easier? How do you think?
I think maybe I'll go with this one. I don't know if many people are aware, but in terms of blockchain technology in general, the UAE government and more specifically the Dubai government has been very proactive with adoption of blockchain technology. You're seeing it being used in a lot of different government entities that are related to a lot of different sectors within the economy. And that's because the UAE and Dubai in general, they've always had this forward-thinking kind of visionary kind of innovative approach of improving the country and improving the economy over time. I mean, there is a reason why that in only 50 years of existence as a country, the UAE is kind of, if you see the level of development that's happened over the years, it's because the government has been very, very forward thinking, very creative, very and once they decide they want to do something, they execute on it. And they've always been embracive of emerging technologies, whether it be AI, whether it be machine learning, cloud computing, cybersecurity, blockchain, all different kinds of emerging technologies are always embraced and utilized, because ultimately for any economy or any country, technology is the biggest enabler and the fastest enabler to accelerate the growth of the economy. So I think and because of the structure of the government in that it's a benevolent monarchy, once the decision makers or the rulers decide to do something, then it's executed pretty quickly, and it doesn't have to go through all the bureaucracy of a democracy and having to go through so many different votes and so many different jurisdictions, etc., or constituents before it passes through. So I think that's one thing that's very positive here, and that's one thing that's enabled blockchain technology to actually be adopted. But I think the main incentive for government to actually whether it be tokenized assets or whether it be utilized blockchain technology is that ultimately if it improves or makes their activities more efficient or more cost effective and makes the people in the country happier, then ultimately that is the target, and that is what is the aim. And I think tokenization of assets or utilizing blockchain technology in different areas is definitely something that achieves those results. So that's why you're seeing it being embraced here in a very, very proactive way.
Very advanced and forward-thinking government. Hope that other countries will follow up to. Okay. Right, so I guess if there is nothing to add regarding the legislation basis or governmental institutions, so we can move slowly to the area of technology, because even if there will be a very clear regulation, there must be a very solid technology so that we will be able to build secure and reliable blockchain solutions. And probably this question will go to Alex right away, because Alex represents Pixelplex as an engineering company. And a lot of our customers ask regarding the platforms that probably in the future will have to be transmitted or swapped or transferred to another technology. For example, we are developing on top of Ethereum. We all know that there are some advantages and disadvantages of this blockchain platform. However, probably in 2 years, there will be something more advanced. And will it be possible, or is it possible to foresee while developing or building an infrastructure? Is it possible to foresee such change in the future and make the swap between technologies as smooth as possible, or it will be something that will have to be built from scratch on another technology?
Well, our industry is developing so quickly that absolutely nobody could say what's going to happen in 3 years from now. However, there is one trend that has emerged over the last couple of years that in essence, most of the new blockchains, at least most of the new sort of smart contract capable blockchains, operate using Solidity syntax-based languages. So in essence, using Solidity for your smart contracts could provide an efficient way of securing, at least for the next couple of years, most of your code base, at least related to smart contracts. And then I think this trend is set to continue, and Solidity is becoming the language that represents, that is used the most for smart contract creation and building. And so I think in terms of smart contracts, Solidity is going to continue for the foreseeable future being the #1 syntax and #1 programming language that is used. There will be obviously exceptions, and there's also this trend for sort of plain English smart contracts and plain English programming languages that allow you to just express yourself using more or less normal grammatical rules rather than programming code syntax. But then again, I think that will take a while to develop, and more complex smart contracts would still be expressed in Solidity for the next few years for sure, and in most of commercial blockchains.
Maybe if I can jump in here, since we're talking about programming languages and Solidity, etc. So I've recently actually been appointed managing director for the MENA region for a company called Casper Labs, and they are a layer 1 blockchain network, which actually utilizes, unlike other blockchain networks out there, like Solidity with Ethereum, Plutus with Cardano, and EOS, and all these other blockchain networks who have their specific programming languages that are specific to blockchain, and only blockchain developers actually being able to contribute to the open source code and developing the network over time. With Casper Labs, the difference is that the actual programming language is not blockchain focused or specific. Rather, at an initial stage, it's Rust at the moment that's being used as the programming languages for the smart contracts and the network, and then ultimately programming languages like Python, C++, Java will be added to the library of programming languages that can be used to develop blockchain. So actually, we are in a stage now where blockchain technology is evolving into this area now via Casper Labs. I'm not sure if any other blockchain networks are doing this, but certainly you are seeing this now. So the benefit of doing that, and why Casper network was set up and built from scratch over the last 2.5 years, is that we want to have developers who can develop the network and pull in from instead of 30,000 or 35,000 blockchain developers out there, we want to tap into the 30 million developers out there who are familiar with other programming languages and programming languages they're familiar with and that have evolved over the many years in the past. So I think that's where you're seeing things change. And I believe, the technology is still very young. People tend to forget that. And over the next few years, you'll see a lot more innovation and a lot more things happening to actually make blockchain technology much more user-friendly for, especially for enterprises, which is also the focus of Casper Labs.
Yes, definitely. Any blockchain technology is still a work in progress. Yeah, for sure. Thank you for sharing. That was very insightful. And I guess we can move on to the last topic that I was planning to discuss today about the NFT tokens. And everything that is happening around this, especially in the past couple of months. And when I was preparing for this panel discussion, I was thinking, how should we talk about this? And then, since it is a kind of hype right now around NFT tokens, it reminded me of one situation when I was traveling to Moscow to visit my relatives. I took a cab. And usually in Russia, taxi drivers, they like to talk with people. And I was surprised that it was 1.5 years ago. And the taxi driver asked me about Telegram ICO, whether I am interested or how much percentage I was offered to buy the tokens on the secondary market by other people. So he was like doing this investigation. I pretended that I have no idea what he was talking about and started to ask like, okay, why? Well, that's interesting. What is ICO? Can you explain me? And then I understood if it just a taxi driver who has no background in the cryptography, in communication security, or in any blockchain sphere, I was talking about this, there must be something crazy happening in this sphere. So I started to worry when I was starting reading a lot about NFT tokens these days. So how do you think, like question for everyone, is it another hype around NFT tokens, or this is something that is really valuable that everyone, even the taxi drivers in Moscow, have to look closely at?
I think, if I may just say that, I think NFTs have actually been around since 2017. The first hype cycle was actually through what's known as CryptoKitties, and it has evolved over the last few years. So I think that NFTs is not quite. I mean, yes, it's talked about a lot, and it's really gaining a lot of traction. But I think because it first emerged in 2017, and then in the bear market, people were actually building the infrastructure for such as ERC 711, I think it is, or 721, or whatever it is on Ethereum, which is the infrastructure for NFTs. And that's being built over the last couple of years. Now, most certainly there are NFTs out there which are of low quality, which will obviously, die down with the hype, but the quality NFTs out there, and this is not just about art, for example. This can be in the form of music or rights, or even a tweet, like what you're seeing with the co-founder of Twitter. So
yes,
it has been evolving. Yes, it's hyped, but I think it's pretty sustainable, especially with quality NFTs.
Yeah, I think that there is a bit of a hype right now. But those that are quality, those that where there's a proof of its source of origin, they'll last. And I don't think this is going to go away. In fact, I think that we will see iterations on it. I think that, what is it, ERC 2981, the royalty standard, I think is a really interesting way to look at NFTs and how to use them. But it's really going to boil down to how people decide to innovate in this space, because right now everyone's trying to, I think, turn every asset that they think is of value into an NFT. But I think as we see the next year or so play out, a lot of what people are turning into NFTs will, they won't be worth much. So there will be I think a bit of a reality check to it, but I'm excited about it. I think it's going in a good direction.
Yeah, and there are quite new technology was developed by Dapper Labs. Saeed just mentioned CryptoKitties, and we all know that they are killers of Ethereum network. So Flow blockchain is something that is new to be introduced, especially for NFT development. However, getting back to the technology topic, we did some research internally in Pixel Blacks. Yeah, it will not be very easy for just Ethereum or Solidity developers to jump on and develop on top of Flow. There is quite a mixture of other languages inside to be introduced for new engineers. So yeah, education again. Alex, Stefan, would you like to add something regarding NFT fashion?
Go ahead, Alex, sorry.
No, I just wanted to say that it seemed, they've been around for quite some time, but their full potential has not been realized, and we are quite far from reaching it. And at the moment, it just seems that the sort of the understanding of what they are and what they could be just sort of reaching the wider circle of people, and therefore prompting is this particular wave of hype. But the actual wave of adoption and the actual usability of it is going to happen a bit later than now. Thank you.
Yes, I mean, we are seeing a couple of different projects in the space as well. And I think, again, it's really about what are the underlying assets that are being associated or linked to NFTs. And I think this is something that we'll probably see a lot of new different types of assets coming up. But I think what would be important is how do you now convert that type of NFT to, for example, an ERC20 token, so that you're able to then get into the broader trading market. So those are some of the things that we would be, of course, exploring, in particular with Pixelplex, who have certainly have the competencies and expertise in this space as well.
Thank you.
Yeah, from a US perspective, I see people, being very active in this space, but I see there's always kind of two camps in the crypto space. And one side is we're going to move fast, break things, ask for forgiveness later. And the other is we're regulated, we have regulators, we need to assess things and move at the appropriate pace in order to make sure that we're doing things correctly. So I look at companies like Rally RD that's fractionalizing shares in collectible assets, and their company is ripe for the whole NFT space, yet they're not jumping into it. What I'm buying whenever I buy a fractional share of a collector car or a pair of Jordan shoes that are autographed is a share of an SPV. And so our fractionalized NFTs then, are we securitizing that asset? And what is that, what implications does that have for, how different jurisdictions might see NFTs as securities, which are regulated. So you have one side that wants to move really fast and kind of seize the moment. So there's always an interesting dichotomy here of how different people approach the space. And I think it's also true for tokenizing almost any asset, but the NFT space is kind of the new one. And I think that's often where the parallels get drawn between NFTs and ICOs, where ICOs were, securities, but yet people wanted to justify them as, passing the Howey test, their utility tokens, let's move fast, let's raise capital, let's do, innovative things. But then in hindsight, a lot of people were hurt by it. So, I just hope that those that are, the major innovators in the space, unfortunately, companies like Dapper Labs have, I think, the right type of counsel to do things the right way. We see that this does unfold in a way that has some longevity to it because it's exciting.
Interesting. Great. I think we are done with the part of discussion and we can go for the questions, if we have any. Anastasia, could you please help us with this? Because we are going over time.
I have one question. I will read it out loud for you. Marek is asking a question, if I may. If I were a company with a good notoriety in the art world, but I don't want to tackle my reputation with the high environmental cost of minting an NFT, do you know where to search if I would like to create a platform for minting NFTs with this issue in mind? Is there a platform based on a third generation blockchain already existing? If yes, is it possible to create a portal marketplace on such a platform?
Mintable.
Sorry?
Mintable.app. I think I mean, it's a place where the process is pretty straightforward, and it's a place to kind of learn and kind of get an understanding for how to navigate it all.
Okay, good.
I hope it answered the question. Anyway, we have a separate chat room in Telegram, especially for those who would like to continue discussion. And I guess we can, oh yeah, this is the link. I guess we can then continue a discussion of any questions. Guys, you can just type it down, and we promise to reach out to our special guests to make it sure that we answer it correctly together with them. And I would like to express my sincere gratefulness to everyone who is here today with me on the panel, and say that it was a great pleasure, and we covered a lot of interesting topics, and I'm pretty sure everyone learned a lot today. And thank you so much for sharing your insights, and hope to speak again.
Thank you. Have a good day.
Thank you very much.
Thank you. Yeah.
Thank you. Cheers.